A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with switch markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. everyone. Welcome back to the How to Trade Trading Room. I'm Shane Vernier, and this is No Donation Friday. Today we're going to look at some live trades. I've got a live one going right now on the 920 EMA crossover strategy we covered yesterday. We're going to look at some 15-minute orbs, sort of a whipsaw, choppy day, but it looks like maybe we got that bullish break after potentially barely missing out on a fake out to the downside on the orb strategy. And also, we've got our 9 EMA locked and loaded and ready to go. Let's go ahead and just pull this one up real quick as we're executing or looking to execute. You can see we've sort of already missed the big move here. We had a dramatic move in WTI coming to the bear, and we've also got a pretty good one coming on 1 minute chart on this Brent crude. Unfortunately, we just missed it because I was too busy talking. I probably should have came live about a minute earlier, 2 minutes early, so we could execute this trade. But as you can see right now, crude oil is definitely on the move. We've come to expect this out of crude. Guaranteed somebody just said something somewhere about the Iran war. So let's go on over to our news cycle and see what exactly is being said. GOP polls measure on Trump's war powers in Iran, lacking the votes to defeat it. That means they were going to vote to make the United States government stop basically conducting the war, not necessarily autonomously, but without congressional approval. They threw that vote away. So it looks like it's going to be all systems go for the Trump administration to resume the war against Iran. Slight progress 55 minutes ago. We're looking at something that just happened, maybe just a couple of minutes ago. I'll keep one eye on the news feed there to see what happened here. But you can see that's a big move in Brent crude. Nice big sell-off there in spot Brent. And you're looking at what, about 104 down, 104.95 to 64. That's significant. And then this WTI trade did not quite materialize, but it is on the move. It is on the move. So we're going to circle back around with WTI and Brent crude oil here, probably in a little bit towards the end of the stream. Potentially, maybe we'll get a 5-minute trade. I would much rather have a 5-minute than a 1 minute, but we have had some success scalping these crude oil products, these spot crude oil products with our 9 EMA strategy. If you don't know what I'm talking about, the 9 EMA, I left the link in the YouTube live chat. I'm pretty sure everybody in the How to Trade community is familiar with the 9 EMA. But this is one of those things where when we're trading a strategy like the 9 EMA, we want markets that are alive. We want them to be alive. If they're alive, we can trade them. Old saying, that if it bleeds, we can kill it. If it has a pulse, we can trade it. We've got to see something that's moving before we can apply a 9 EMA to it, unless we're going to just get into flat market conditions. It's going to be pretty ugly. This stuff right here is moving. It's moving. So with crude oil sort of taking a little bit of intraday short-term volatility here, we're going to circle back around and see if we can't potentially grab a trade. We'll go ahead and look at that 1 minute chart, though. Maybe we'll just look to execute a trade here relatively shortly. We'll wait and monitor it and see exactly what's going on. So good to see everybody out there in YouTube land. Let me see Bobby Bob. Good to see you, Bobby. Welcome. Jason Max and yo Shane. Yo Jason, how you doing? Good to see you. Kelvin as well over in the How to Trade community. Tuku, good to see you. Tuku, Andrea Garwal, Ralph H, Dave Zapple. What up? What's up? That's that old Budweiser commercial, isn't it? What's up? Is that coming back? I hope that's coming back. I enjoy that one. All right, let's go ahead and take a look at the 920 EMA. We covered this in our live workshop yesterday. If you did show up and enjoy it, I actually got a lot of great feedback on that. A lot of you enjoyed it and dropped me a line, so I do appreciate that. The 920 is a solid strategy. It's one of those that I really enjoy. This would be a trade that we sort of, I don't know if we touched on it yesterday. I believe this signal was probably already in play. Yeah, it was. But right now, we got in right at about entry. And now we're just sort of riding this thing out. Great Britain Pound USD 4-hour chart. This is really a good look at a schematic of a trade that I like. I really like it. You got sort of your market entry, which could have been right up here. You can see our big gold candle there was our entry point. But how do we design the trade? Well, we know that our stop loss needs to be beneath this swing low right here. A couple of options. We could certainly put it right up in here beneath this swing low, but that would mean we would have to have waited before we get in on our entry point. So I'm going to go ahead and go with the original stop loss, which would have been right beneath this bottom, right beneath this swing low, bottom of market structure. And now we're just sort of grinding north. So you can see there's sort of your entry, your market order right after that 4-hour bar close. 4-hour chart, very, very, very strong time frame to be trading Forex on. And right now we've got a trade. We've got a trade going. Looking to risk, I don't know, about $725 and looking for a profit of about $729. You can see a couple of different things. You could always say that, listen, I want to get more out of these trades, Shane. I want more time, or excuse me, more bang for my buck. I don't want to just scalp. I don't want to be a one-to-one trader. I want to be a position trader. And I say, okay, you can certainly do that. There's absolutely nothing wrong with doing that. And all that is is a function of moving your profit target where you feel like it needs to be. So like, let's say we were moving on market structure right here. You could see this right here. This would have been what? A plunge base plunge or whatever. Well, what's the opposite of rally base rally? Sell base sell. I don't know. Whatever you want to call it. Make up your own term. Make a YouTube video. Try to sell some tickets. I mean, it might work. Bottom line is this. There's your sell off. There's your base. And then there's your sell off. So when I'm looking at this chart right away, I'm not a smart money trader. I'm not an ICT trader. I've been saying that a lot lately because I had some ICT people talk to me and say, hey, Shane, what are you talking about? Well, that where I'm from is a value area. That's nothing fancy. There's no name for it. Oh, okay, well, that's a base. That's a base. Okay, call it what you want. It's a value area. It's an area where, yeah, we had two-way trade for an extended period. That's a value area. So this value area right here, this order block or whatever you want to call it, that's sort of what I'm shooting for on this trade. I say, well, you know what? It's a one-to-one risk versus reward. That's not bad. I'll take that. That's my personality. However, a lot of folks just say, Shane, I'm not even going to waste my time with that. I want to take the top of market structure. We're going to go ahead. We're going to lock in this bottom in here, sort of already in. We got our buy signal, sort of a nice area to be taking a position long. And if you want to take that position long, you're just going to move your profit target. However, what doesn't change? Your initial stop loss right beneath that swing low, that does not change. And that, in my view, is the most important part of taking one of these trades, is knowing where your stop out has to be. Now, the real question, and I was pitched this yesterday, that's why we're sort of starting with this 920 and recapping it. The real question was this, Shane, what's more profitable? Going for the larger risk versus rewards and getting those payoffs, or getting those tighter risk versus rewards and getting the more consistent payoffs? And I always say, it's up to you how you want to trade. I really, honestly, I can tell you from experience, years and years of backtesting experience, I can tell you right now that when you go through and look at historical data and optimize it, you're going to get told to do things like this. 1 to 5s, 1 to 10s, 1 to 7s. I did it. I lived it. First 2.5 years of my job with the 7 V-Bar trading group was sitting there backtesting and optimizing, basically optimizing our system on past results. All we're doing is backfitting the data. I will almost guarantee you that over the long haul, these trades here, these are the ones that the computer will tell you to make. That's what your backtesting, optimized results will tell you to make. And that's why there's so many people out there on YouTube going, I'm looking for 5x payoffs or I don't trade it. I'm looking for 10x payoffs or I don't trade it. And I go, that's great. Why not just shoot for a 500x payoff and sit around and basically just show up every January and buy a bunch of penny stocks, and now hopefully one of these years it hits. You know, that's the old saying. You know, you don't know who's going to win the Super Bowl, but before the beginning of every year, you bet all the ones that are 500 to 1, and you bet all your money on it because you hope one year you're going to win, and that's going to make you, and that's going to make your career. I'm not kidding you. That's what folks do. That's what a lot of these folks do on all over YouTube. I see it every day, and I go, is that trading? In my opinion, that's gambling. That's the roulette wheel. That's the slot machine. I'm not interested in that. I want to know if what I'm doing makes any sense with regards to what the market's doing. So if you were going to make this trade and you said, I got to get more money out of it, Shane, I'd say, okay, move it up to the top of market structure. I'll give you that. I'm willing to look at that. I'll say, okay, that's possible here. But what else is possible? I know I got a really good shot at that. That order block right there, just maybe right at a 1-to-1, under a 1-to-1. I got a shot at that. Now, the beauty of this, no matter what you do, is that your risk doesn't have to be that big. 1 to 3% any given trade, maximum of 5%. If you want to be risky and aggressive, I'll let you go 7%, and I won't tell anybody. That'll be between me and you. But realistically, 1 to 3%. And there's a lot to be said. Maybe you're only putting 1% of your money down of your trading account, and you just figure, well, if I'm only risking 1%, sooner or later I'm going to hit one of those. And I said, yeah, but don't kid yourself. You could miss 20 of those in the meantime. It is possible. So I got that question yesterday. I felt like it was a good place to start our stream and talk about that trade management and what it is to truly be dialed into a strategy and a system that can pay you off potentially over the long run. It's trade management, it's risk management, it's being able to dial yourself in and optimize your opportunity at success given your resources, given your aptitude, your capital resources, and also your strategic initiative. That's essentially all trading is. That's all it's about. You trade. Think about what a trade is. What do we do when we trade? We give away something to get something back in return. That's all it is. So if you want a shot at the big money, go for it. If you want a shot at smaller money but more consistently, similar to what I like to do, then go for it. It's all up to you. It really is. Let me see, Bobby Bob, No Donation Friday. Yeah, we're going to talk a little bit about No Donation Friday. Fortunate Wilson, that's just fire across the board. Fortunate, good to see you. Welcome. Let me see, Tina Jing. Hello, Shane. Is it holiday in the U.S. today? No, today we're wide open for business. The markets are rocking and rolling. What the holiday is going to be is it's going to be on Monday. Monday's Memorial Day holiday, and that will feature a market closure. Everybody in the States will pretty much be out barbecuing and typically drinking beer, watching baseball, things like that. So, yeah, you're going to have a Monday holiday. Forex will be open. Crypto will be open, but your U.S. equities going to be modest. There may be a little bit of action in the commodity markets, but Monday's a no-fly zone. It would be a no-trade day. Today, panning out to be a pretty good trade day. We're going to look at some orbs here in a second. That's for sure. Luffy Lucky, good to see. Hello. Say the name. Luffy Lucky. Luffy Lucky 0701. Wow. Creative. He's clever, or she's clever. You're clever. Nothing wrong with that. Is BTC sideways? Yeah, we'll look at Bitcoin there. I'll go ahead and take a request there on Bitcoin. Why not? Ralph H. Does the higher risk rate ratio increase the profitability of not hitting the take profit? Probability. All right, let me read this one more time. Luffy Lucky got me off my game here. All right, Ralph H. Does higher risk ratio increase the probability of not hitting the TP? Yes. 100%. 100%. The further that you're looking to grab a move, probably the less chance you have of not getting your stop loss hit. Now, here's the other thing that's working against you, especially the Forex pair, Ralph. Remember yesterday I dug in and showed the swap fees and the swap rates. I mean, that's also a big deal. I mean, when we start talking about potential profitability, I mean, let's just start off with our trade. Let's say I'm going to shoot for 1869. Okay, let's go for the home run. Let's say we're going to shoot for 138.87. So I'm looking for about a 440 pip move here. All right, I'm going to go ahead and look for that. That's going to be what I'm looking for as my profit target. So what exactly do I have to take into account? It's not just trading. It's also how much is this going to cost me? So let's go Great Britain pound USD. That's what we're looking at. Right there, my deposit currencies, US dollars, my lot size. Let's just put one measly lot on, and the number of nights. Now, here's the problem that we're going to run into. How many nights do we think that this is going to take? Well, if I'm in it until I hit my profit target, it could take weeks and weeks, maybe a month. Maybe it's a longer-term play. So let's just be conservative and say, okay, we're looking for a payoff of $4,446. We've got 100,000 down there, which whatever that's worth. I don't know how many lots that is off the top of my head, but you could see that's what we've got going. So let's just take a look at one lot and how much that's going to cost us. If I can find my, here we go. All right, one lot. Type in my number of nights. Let's be conservative. Let's say 10 nights. Let's say I'm going to give it 10 nights. Okay, $35 is all it's going to cost us. Not bad. Let's say we put on 10. How much then? $358. So you can't ignore this. And what happens if this thing turns into, okay, I've been holding this position for 3 weeks. $751. So let's say you've got 751, and I'm just setting up hypotheticals here, but 751, and you've got, 4,400 up there, 4,500. You've got to knock that 751 off of there and say, okay, I'm only going to make 3,800 on there. What does that do to the percentages I need to be a break-even or a profitable trader? It's going to hurt me. It's another cost. That means you're probably going to have to win one, maybe two more of these trades at the end of the year to cover those swap fees. So while I don't disagree that it's a good idea to shoot for the moon sometimes. It really is. I have no problem with that. What I have a problem with personally is the systemic risk, being exposed to the entire market and the entire system for weeks and weeks at a time. That could be really problematic. Now, that being said, it could take us 7 nights to get here. It could take us a day to get there. We don't know. Right there, that's my sweet spot. It's going to be that order block on this trade. We'll wait and see exactly how it pans out. All right, we had a question on Bitcoin. Let's go ahead and cover Bitcoin, and then we'll sort of dive in to our orb strategy setups. Interesting day to be trading the orb. A couple of things we're looking at with Bitcoin. 4-hour chart, what just happened? Sell signal. Let's execute. 920 EMA crossover. Let's go up to trade. Go right there, sell. Let's go ahead and just sell the market. All right, 1 unit. Let's go ahead and sell it. Okay, so what do we have going here? Tiny leverage, clearly. what will we be doing? We're selling, 4-hour sell, big purple bar. You had a sell signal there. You had a buy, sort of that weave formation. So we're kind of getting torn up. I mean, like you said, sideways market. Bitcoin's been absolutely sideways for, the past several days. Nice big bearish move here. That was beautiful. We had a great trade in Bitcoin not too long ago that we were in for quite a while till we got paid. But this right here, that's your sell signal. Okay, so if that's your sell, do we have a chance potentially to get some money here? Yeah. How would we build the trade? Stop loss, you could do a couple of things. You could put it right there and play it really tight. I don't have a problem with that. Just understand your probability of winning probably going to be a little lower. Number of wins is going to be lower. When you play tight, you get chopped up a lot. Next thing you could do is you can go right up to this swing high here. You could do that, or you can go to the top of market structure right there. That's swing high. And look to maybe get some money going. Look at that box. And get some money going down here. Now, is this potentially a bad trade? I don't think so. Where would that profit target be? It's a little bit better than a 1-to-1. Take a look at that liquidity sweep. A lot of people say, it's a liquidity sweep down there. Okay, whatever you want to call it. Take a look at that low. That low right down there's what, 74.9, 74.912. Where is that? That's right above 75. Yeah, I kind of like this trade now. I'm saying, do we rotate down and test 75? Why not? Is it a pretty good short, 4-hour chart? I have no problem with 4-hour charts in Bitcoin. None at all. So if you were looking at a 920 EMA crossover, looking to cash in on a bearish move in Bitcoin, that's a structured way to do it. It really is a structured way to do it. That's for sure. Something to think about there. Let's see. So to answer your question, Leffy Lucky, is Bitcoin sideways? Yeah, it's sideways, but we do have a sell signal there. You can see the trade sort of going against us right now, but we can go ahead and let that one simmer. You're only looking for about, $1,700 to sell to the bear. Not horrible. Dave's Apple. With the Bitcoin trader, you're not too concerned about the RSI. Well, here's the thing, Dave. Essentially what we're doing on a 4-hour chart is we're using the 9 and the 20 as sort of our filters. So our 20 EMA, the first thing I would look at here is I'd say, okay, what exactly is going on? Pretty good sell-off from right up here around 81. This thing came right down. There was your crossover. So there was potentially your bid signal. All right, that thing lost. Then you had a sell signal. All right, did that one lose? That sell didn't really lose. And now you've got another sell setting up. So the first thing I would say is when we're looking, okay, RSI, of course, that's going to be right around the 50-yard line, the 50, between the 70 and the 30, right in the middle. Why? Because the market's flat. So if you want to play it this way, it's a breakout. You're playing essentially a breakout of this range. I don't hate it. I don't hate it because it is with the broader trend. To answer your question, on a 4-hour time frame, I view the 20 as being our filter. The time frame's long enough to where we don't need to get into the minutia of a 1-minute chart or a 5-minute chart or a 3-minute or whatever you want to trade. The 4 hours giving us big enough ranges, and the time frame in itself, the idea is that it's going to eliminate a lot of the false crossovers. Now, clearly, that's not the case right here. That was a loser. But this sell right here, even though you got a bid right there, that sell sort of developing into a winner, and you got another sell. So frequent crossovers, I don't like that. Typically, I don't like that. I like to see something where we get the big move and you got a chance to get in on a nice trend where there's a lot of space between the 9 and the 20. But this trade right here, this would be one where we're looking to sell before the breakout. So in this instance, theoretically, it's a trend following trade in the macro sense, but it's also a breakout trade. And that breakout is going to really involve us moving from that 50 level on our RSI. So in my view, your 4 hours, your dailies, I don't think you need RSI. Even really your 30-minute chart during key market times like we have in the U.S. session, not sure you need it. Anything lower than 30 minutes, I would probably be using the RSI. Yesterday we were trading 1-minute charts, things like that. Starting to go pretty well, though. We'll go ahead and keep an eye on this Bitcoin trade, though, and see exactly how it pans out. But interesting stuff. A lot of theory. We dove into the weeds with the 920 yesterday and took a deep dive on the strategy itself. And I started to remember why I really liked it. The multiple time frame analysis point that we made about identifying the broader trend and just saying, okay, the trend's down, let's just look for sells. Or if the trend's up, let's just look for buys. I got a feeling that I mean, there is no holy grail. There really isn't. But that type of thinking could put you into some really great trades that coincide with the trend. And that's what this is all about. That's for sure. All right, let's confuse everybody with some Fibonacci's. We got some Fibonacci sequences to look at here. You can see right there. I'm really liking this level. This 116 zone has been very stubborn for the Euro USD. The low right there, 115.76. We've since bounced up. We're back up above 116. When I take a look at a chart like this, and I take a look at, okay, what should I be doing? What should I be thinking as a strategist, as a trader? Well, the first thing I should be thinking of is, okay, what's there? Well, 116's there. Well, we've traded it before, though, Shane. That doesn't mean anything. You're right, it doesn't. But the bidders have defended it this time down. And now this definitely is turning out to be our inflection point. So let's still go down to a daily chart. There shouldn't be any questions about how important that 116 level is now. Nailed it once, twice, 3, 4. The game is on at 116. Okay, that's an area of two-way action. That's where the bidders and the sellers are slugging it out. And one of them's going to win and one of them's going to lose. That's the way markets work. That's the process of price discovery. We match buyers with sellers. When one of them gets dominance, price moves. That's it. Buys, sells, more buys than sells. What, price rises? More sells than buys? Price goes down. It's easy. That's what price discovery is. We're seeing price discovery in a value area develop right around 116. Now, do we go lower or higher from here? I genuinely don't know. I don't know that. If you were holding longs, I wouldn't hate it. I wouldn't hate it because you do have sort of that nice little rounded bottom setting up right beneath the 116 level, something like that. That's pretty good stuff down there. Now, that's going to really be your hot zone going into next week's trade. So the idea is going to be real simple, is if this market does break beneath 116 and takes out this weekly low, which is going to be right down there at 115.76, that's when you're probably going to get the extension down there to 115.29, 115.25. Now, one thing that I do want to point out as an observation is this wave count is a weekly wave count. It's really tight. I mean, look at the area between 38% and 50%, 116.93 to 45, 145 to one, it's about roughly 45 something, 40 pips, somewhere in that zone. Really, that's tight. 62% to 78%. You probably could play a breakout beneath this level if we break beneath last week's low and look to sell and maybe ride that down to 115.30. More than likely, once 62% gives way, it's going to give away. And when it does, we're not just moving a little bit, we're moving a lot of bit. And that's absolutely, absolutely huge. So watching that closely. As far as our Iran war, I'm still looking for headlines. Let's see. I'm not seeing anything. I mean, okay, slight progress. Live updates, Rubio says slight progress in Iran peace talks, but rejects Strait of Hormuz deal. I mean, that's the whole thing. Pakistan Army chief lands in Tehran. U.S. cites some progress. Okay, so that was about 7 minutes ago. So if we're going to go ahead and take a look at our crude oil trade 7 minutes ago, that's a little bit more than 7, but that right there could be a sign of optimism. But right now crude oil's rallying. Now it's got back all those losses we saw earlier on that 1 minute. Now it's just taking off. Yeah, this is just really tricky stuff. These news days are just, they're for somebody probably smarter than me. That's for sure. They're tough to trade. So if you're trading crude oil, just watch what you're doing. That's for sure. All right, I did promise to talk about the opening range breakout strategy. Sort of Dolesville today. Let's go ahead and get in there and take a look at it. So we're looking at the 2-bar orb. It's sort of this is our NAS 100 or US 100 CFD. That's sort of the one we're going to look at here for the NASDAQ. But right there, opening bell, ding, ding. You'll notice that with a CFD, the volumes are never really great. Tick volumes, but they don't really show you the big bumps. You're going to have to just look on your clock. For me, that'll be 7:30 a.m. Eastern, 7:30 a.m. Mountain Time, 9:30 a.m. Eastern. And what you have right there is bar number 1 and bar number 2. There's our range. We haven't broke out of it just yet. Sort of a fake out down here and then a reversal. This trade has not gone active yet, so I would be probably scrapping that orb. I don't know that I would be taking it going into the U.S. close on a Friday. I think that could be problematic. U.S. 30, a little bit different type of a structure here. You've got sort of there's your high, opening bell, ding, ding, high. And then this is one of those. The second bar trades completely inside the first. And then we run down here. So here's really a good teachable moment. You did get the bar closed beneath your opening range. Now, I would say that trade right there is really close to that bottom. So it's hard to know if the bottom of this has acted as support just yet. So if you wanted to pass on that trade, you could. However, sometimes those are the best trades where you get the timing and when they're right there. I would chalk this up more than likely as a loser. Something like that would have been probably what you're looking for. Maybe a little bit bigger on your range, but something like that. This would have been a loser, more than likely. Because you had, if you're short there, I mean, it just goes against you, and then it rotates up. Probably would have stopped you out right there, and then rotated back down into the range. So these trades, these long trades towards the end would be irrelevant. Remember, the key with an orb is you're only taking one loss. You're only trading one side of the orb. As soon as it breaks, it breaks. This is tough, though. I'm not going to lie to you. That is very, very close. If you wanted to hesitate and pass on that, there's nothing wrong with that. There's nothing wrong with passing on that trade, not just because it was a loser. Now, I understand I'm going to get a lot of heat. Well, you're playing both sides, Shane. If it would have won, you'd have said, no, I mean, the orb is what it is. I mean, it's a strategy. It's a way to approach the market. Odds are, no lying, I probably would have taken it. I probably would have taken it. I would have said 15-minute chart. My risk isn't that big. All right, let's do it. Let's get after it and let's do it. Because realistically, what are you really looking at for your loss? Your stop loss is right up there. What is it? Let's just say we set it at 50, 77, 13, something like that. And we're getting short down here at 55, 143. So what is that? About 170 pips. 170 pips, something like that. Maybe you're playing for $1 a pip, $2 a pip. It's only $170 or $350 trade. I mean, just you take the trade. If it doesn't work, it doesn't work. But that one right there, I would probably say it's a loser. I would. It's close, though. I mean, I like to see them close a little bit further down, further out. Now, if you went, took the 50% rule, you might have been able to make a few bucks on this US 30 trade, something like this. Maybe you're selling 50%. You get a little bit of rotation there. But all in all, just an ugly day for the US 30. Even though you're up about 420 points, it's not really because of the U.S. session. So something to think about there if you're trading the U.S. 30 day. S&P 500, real similar type of a situation. There's your close. More than likely, you'd be in big trouble here with your short. Your short would have been right there. Stop loss could have been right here, somewhere in that zone. Profit target's got to be down in there somewhere to make it worth your time, at least a 1-to-1. So if that is the case, you're deep underwater in this trade. Choppy day. Choppy day, no question about it. So there's a couple of ways that you can avoid trades like this. Now, we always favor the 15-minute orb strategy because people love the 15-minute orb. They want the shortest time frame. The 15 minutes about as short as I'll go and even really entertain the orb strategy, opening range breakout. But here, 738, that's more my speed. 30-minute chart. Sure, the risk is bigger. The range is typically are bigger, but that can keep you out of that noise. It really can keep you out of that noise. So something to think about for sure. Let me see. Got a question here. Dave's Apple. How do you draw that red and green trading box? Yeah, it's just over there in the tools, and what you're looking for there is a long position or a short position. So in this case, if we were going to get a long position going potentially towards the end of the day, you'd be doing something like this. That gives you your risk versus reward, and you can dial it like you go. TradingView's pretty good. They got everything in this. I honestly, I don't even do it justice for figuring out all the features, but you could definitely dial in risk and entry prices and everything. It's got everything you could ever want to do, and this just builds trades. This just gives you a good look at what the trades are. I do like the drag and drop functionality of MT5 though, and we do a lot of that with the trade management. So the orb, every time I write orb, we're gonna trade the orb. But typically, it's not that great. But remember, if you're getting chopped up consistently with your 15-minute orb, 2-bar orb, step back to the 30-minute. Especially if you're trading the U.S. equities indices, 30-minute chart, not a bad way to approach this. So we've got a minute left right here. We've got an S&P 500 trade. Let's go ahead and execute this thing. If we do get the chance. Right there is the top of our New York range. This is our 30-minute orb, top of our New York range. We've got a chance potentially to take this trade. Let's go ahead and do it. Let's get our paper trader loaded up and ready to rock. And here's our trade. All right, what are we going to do? We're going to be going market order if we get a chance to. $34 seconds. What are we looking for? We're looking for a bullish close outside above this. We want to see it close above that New York high right there. Now, we've made it a fresh New York high, New York session high, but that right there, that's your opening bell high. Okay, now I'm starting to feel it. Now this is starting to look like something that we want to be involved in. It's clear cut. It's right above this. It's right above our range. Do we have a chance to get in on this breakout? If it holds firm, it's got to hold up there. 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, send them. Okay, we sent them. We bought the market. Where are we at? Did we get filled? Sometimes this simulator is a bit slow. Did we get our fill? Sometime today, guys. All right, so there we are. Couple of things we can do trade management-wise. The first thing we could do is put our stop loss conventionally beneath the orb. Big risk. We could put it beneath our trigger bar right there and play it tighter. I like that better, especially this time of day. We're looking for an immediate break. We're not looking to get into a trade that's going to go against us and just sit there and work. We want to see this thing go. Now, the other thing we could be waiting on potentially is to improve our entry. We could wait for a pullback back down into this range, the 50% level, or we could be using a Fibonacci retracement of our New York range right there and look to get in maybe at 38%. That's probably, that's a far superior trade in my view, 74.90. But let's go ahead and let's just play it. We bought it. Let's go ahead and dance with the one that brought us. I'm going to play a tight stop loss here, right beneath my signal bar. My signal bar is pretty good sized, and we're going to see if we can get a little rotation to the top side. Is this trade really viable going into the end of the session? Is it good? Friday going into Memorial Day weekend. You're looking at about 2.5 hours left in the U.S. trading session. The S&P 500 CFD will trade a little bit after that as well, just with very low volumes. I think that you've got an opportunity here potentially to get chewed up to death just because of the timing. I don't know about playing late day orbs on a Friday. Tuesday, Wednesday, Thursday, yeah, do it. Go for it. Go for it. Even if you have to hold through the market close and with these CFDs, you don't have to pay an added margin fee. It's not like a futures contract, but something like this, we're betting the market's going to get up from right now until the close. Does it? Do all these markets close on a positive note with the war looming over the weekend, with a long market break going into the Memorial Day holiday? I see a lot of external factors, but we're going to let this thing play. Let's see exactly what happens. We've got it set up at roughly a 1-to-1 risk versus reward. And we'll just go ahead and let this one twist in the wind for a little while and see exactly what pans out. But that would be an example of how to execute an orb strategy. That's for sure. That's exactly how you do it. All right, guys, got some questions here. I'm getting way behind on the live chat as per usual. Let's see. Kelvin, why on Friday it's like a fake move Friday? Well, that sort of is going to play into it's going to sort of play into our Friday strategy. Fridays are tough. They're not necessarily always tough. I've made money on Fridays. I've lost money on Fridays. But the closing bell for the week is a big deal. All right, let's get that straight. It's a big deal. And the reason why it's a big deal is because there's a lot of folks that are managing their portfolios, a lot of day traders, a lot of swing traders at the end of the week. They're getting out of positions. They're maybe entering positions. Institutions, probably not as much. Options, as big as options contracts and options trading have become, those end of the week options that are expiring, that's going to bring a little bit of action to your markets just because of the way that the hedgers want to unwind some of their positions with relation to their options holdings. That's hard. I'm not even going to get into that because it can be difficult, but it is a factor. It can make things choppy. But for me, the things that make Friday's trade choppy is that looming market closure. We know that the end of the week's coming. And do we want to hold anything over the weekend? Given this wartime environment, it's risky. Holding things over the weekend is risky. No two ways about it. In my view, I believe that's why there's incredible chop. And the other thing's your news cycle. I'm watching, we're talking here and we're going over the charts and I'm watching right out of the corner of my eye. Rubio says slight progress in Iran peace deal. Pakistan army chief arrives in Tehran amid mediation efforts to end war. So if the Pakistan army chief is in Tehran, does that mean that the Trump administration is going to resume bombing this weekend. Congress did not vote to limit the war resolution, war powers, so basically they're green lit to start hostilities again whenever they want. How do you unpack all of that going into the weekend break? That's why it's pretty choppy. That's for sure. All right, we got another question, then we're going to go ahead and get to some of our fundamentals and see about maybe finding another trade potentially. Ralph H. Shane, is your trading strategy written on paper, on your computer, or do you keep it in your head? Well, a lot of these strategies that I do, the 920 stuff, the ORB stuff, that's, we've made the videos. That's pretty much all in my head. Those are tutorials. Those are jumping off points for you guys. My own personal strategy is something that I pretty much have. I have the guidelines written down. Hang on one second. Speaking of strategy right there, WTI buy. No, I don't want to depth the market. I want one-click trading. Buy it. Okay, so there's our bid. How do we want to trade this? Do we want to go really tight with this 1 minute scalp, something like that? I have no problem going tight like that. And then let's go. Let's take our profit target up and see if we can't get a little bit of price action right to there. All right, so to answer your question, Ralph, it's good. Typically, I've always got reminders. Let me see if I got a good example of one. We need that trade to get up and win. All right, essentially this is what I do. I got two of these right in front of me, two clipboards. I'm going to have my range numbers. I'm going to have my range numbers and key events written out and the timing of how the trading day should unfold in front of me. That's what I do. I look there, I sit there and I look and I say, okay, I've got big time range numbers. Like let's say, just for example, I've got range numbers at 116 for the Euro USD. I've got 115.50 or something for the Great Britain pound. And then over here, I'm looking at 100 for WTI crude. I'm looking at 4,500 for gold. And I've got my key numbers written in front of me. And then we're looking at how's the day going to unfold. Are there any big news events? Is somebody talking? Is there going to be an economic release during my trading? And I have those, and then I have my proprietary range numbers. I don't have any examples of those in front of me right now, but I also typically have my range numbers right there. So I'm looking at my range numbers. I'm looking at my key levels. I'm trying to figure out which levels are going to converge, and then I've got my timing written out of how my trading day is going to look. And then I'm just sitting here writing down trades, making notes about what I see during the day. Honestly, in the next room over there, I have reams and reams of just handwritten scribble notes that I've made over the years. That potentially all mean something. And I review them at the end of the day. And then at the end of the day, we take a look at the performance, and then we put it to bed. We put that day to bed. Playing real tight here. Look at that. We're already out of that. Boom, already out. This one right here, we're going to get wiped out too, looks like. But essentially, that's the trading day, Ralph. The idea that it needs to be in front of me at all times. Yeah, I'm a big fan. Two losers. That's why you play these tight. Big fan, absolutely a big fan of having everything as organized as you could possibly get it in your mind. And a lot of that has to do with your timing, what your levels are going to be, and really what markets I'm focused on. So if we're in just a normal trading day for right this minute, I'm looking at WTI crude, I'm looking at gold, I'm looking at the E-mini S&P 500, and I'm looking at the Euro FX futures. So I've got all my levels out. I've got my timing and everything. So I know exactly what I'm looking at for a given session before I ever start trading. And then as I see things pop up during the day, I make the notes. And then we look at it at the end of the day and then turn the page to the next day. Most of the time with the key levels, you pretty much only have to focus on that a couple days a week. So like Monday, Tuesday, once our ranges and everything gets set up, then it's pretty easy. But I've got it written down right in front of me on paper. The trading strategy itself, not really. The Fibonacci's and the moving averages and things, those things are all pretty much going to be plotted on my chart on a Monday. So I'm going to know exactly what I need to do and what I need to look at pretty much the rest of the week. Hope that answers your question. Good question, though. On my computer, just on the charts. But I don't know. I used to keep records on the computer. I'd have like an Excel spreadsheet. And I know a lot of you do that. A lot of you do it very well. And that's great. That really is great. The platforms themselves pretty much do it for you. Like if I wanted to pull up my trading history of just a lot of these demo trades we've taken here, I mean, you just go to your trader's toolbox here on MT5. If I can get this thing to expand a little bit, and you just start looking. You start looking down through there, and that's going to give us a pretty good idea, of the trades we've been placing, Something to think about there, though. If you want to write down all that stuff and document it and do the spreadsheets and try to filter the data yourself, you certainly can. For me, is it worth it? I don't know. The computer sort of does it automatically for you, at least with your results. All right, let's go ahead and take a look at a few other things here, and then we're going to sign off. This ORB trade sort of hanging in there in the negative territory, but we did withstand sort of a retracement there. We may get up and get paid there. I think that's sort of a fascinating trade. Okay, let's go ahead and hit a few trade updates and a few fundamentals, and we'll call it a week. This is going to be the big one that we were waiting on forever. It wasn't a bad trade. It's just I'd say it's in trouble right now. Printing 138.10. We had a few near misses. They could have been real easy, but this still produced pretty well. So this was going to be our key level in the U.S. dollar, Canadian dollar, and we had converging indicators right up there at the monthly Bollinger midpoint, and then also our 13-month EMA. Let's go and take a look at some of the performance here. You can see we're testing those levels now right around that 138 handle. We were looking to sell 137.85's 30-minute chart. You can see it didn't do too bad. I mean, really didn't do too bad. You can see we're trading sort of up against this number now. But this area right in here that sort of developed after the market light yesterday during this Asia-Pacific market, you can see we went up, and then we sort of took that out. But this sell right in here, essentially, this is the area we were looking at, about 137.85-ish. We did get some good bearish price action that went down to about 67. So you could say, well, we got an 18-pip move there. Well, we were looking for 30. We were looking for 30. So if you moved to break even at that point, I really wouldn't blame you. The spike high right there was right at 138. So the play probably was just to sell 138, and we could have made some easy money there. But we were looking at being real aggressive here, 137.85. Not too bad of an entry. We made some money, and then it came back against us, break even right there. And then since then, it's just been going against us. The market is broken above these resistance zones. It's broken above 138. So when that happens, basically you're looking to switch your viewpoint instead of looking to sell this moving average. And you can see it really did chop sideways for a while there. You're probably looking to buy it as downside support. So a lot going on right there in that trade. Not really pleased. I thought we could easily get a bigger pullback than that, but the market's moving higher, and a lot of that has to do with WTI crude trading at about $95.50. That was really the big deal. This is probably going to be the one that we'll talk about forever and ever. This is the one that's coming our way, 30,000. We're looking at 29,950 as being our key levels, and you'll see right here we're at 29,632. Natural resistance at 30,000. This is a big one. This is a big trade. The NASDAQ 100 is on a freight train with 30,000, no question about it. Remember, that's the CFD contract, so just your regular NASDAQ is right around 29,630, and we're looking at 29,950s. So I think we're going to get there relatively soon, and from that zone, from this area right up in here, we should get a pullback. I would love to get it today. I mean, if you could get it today, another 300 points, that'd be fantastic. I just don't know that we're going to get it unless some sort of piece of deal is announced. But you can see right here sort of our compression zone that's developed on the daily. I think we're going to move a little bit higher and get an opportunity to sell up there. Maybe not until Tuesday, though. Tuesday, I would be willing to bet Tuesday could be the day. It could be the day that 30,000 comes into play for the NASDAQ. I don't know if they're going to have a parade. I don't know if the NASDAQ, I imagine it's going to be an incredible press release. We know Trump's going to be out probably on the White House lawn spiking the football, just saying, oh, look at the growth. Look at the equities growth. Yeah, whatever. 30,000 though. I mean, who would have thunk it? Realistically, look at our buy, our 920 EMA buy back on the 9th of April. Holy cow. Really, really incredible stuff. Incredible bull run out of the NASDAQ. Really going back to COVID. It's been, I mean, if you want to go back that far, 5 years, 6 years, where's COVID at? Right there. March 2020. March 2020, the NASDAQ was trading at 8,000. Now it's trading at 30,000. Is that good or bad, do you guys think? It's inflation. It's inflation. No two ways about it. Inflation played a big role in stocks moving as high as they have. We could tout growth. We could tout economic growth, I suppose. We could also just say that there's that much more money in the system now. AI certainly is a huge driver of wealth or valuation, I guess, in the NASDAQ. But, we're going back to COVID, 8,000. We go from 8,000 to 30,000. That's incredible.
That's absolutely incredible. So we're watching that one, though. I do believe we're going to get a chance to scalp right in front of 30, and that could be pretty good. Could be pretty good. All right, week 21. Today is going to be the Michigan Consumer Sentiment Index. I want to briefly mention this. And remember our psychology for Fridays. No donations. Winning week, bank at least 50% of your profits. A losing week, if it's small, trade it as usual. If it's big, wait until Monday to trade. Neutral, if it's usual trading, just trade as usual. If you're in zero, can't get the car out of park, just go ahead and trade as usual. Reduce your leverage or don't trade at all. The choice is yours. For me, the biggest ones that you really need to be cognizant of, if you're winning or losing. I say if you're winning, it's very important. If you've sat here for 5 days, you take some money home with you. I think it's imperative that if you've put, even if you're trading 3 hours a day and you've put 15 hours in or 12 or 15 hours in, take something home. If you've made a few $100s, take half of it home. That will really help you over the long run, showing up Monday saying, okay, I'm coming off a winning week, even if it's a small one. Now, we all want the big winning weeks. We all want those ones where we're just stacking chips and feeling great. We want that. But sometimes it's, we got to live on the margins. Sometimes we only made $50 or $100. Take half at home with you. Don't get in the habit of giving it all back on Friday because you didn't make enough. Don't think like that. It won't get you anywhere in the long run. Believe me. All right, losing week. If you're small trade as usual, like I said, if it's a small losing week, things have gone well, things have gone bad. Maybe you're just down slippage or something and maybe just down commissions. Trade it. It means you're winning some, you're losing some, you're not doing bad. Go ahead and trade. If it's a big losing week, consider waiting until Monday to trade. If it's a big losing week, that means things are not going well, and it means that more than likely you're going to chase your losses today, and you're going to come back maybe without an account on Monday. I know it's hard to not really go for the gold every single day, but today, maybe Fridays are your best trading day. If that's the case, keep doing it. I haven't seen anybody that just shows up to trade Friday, though. I think typically you got a better chance with that early week action, midweek action. But in any case, if it's small trade as usual, if it's big, shut it down. If you're having a big losing week, it means you're getting your tail kicked. Go do something else. Come back Monday. Come back Monday fresh. All right, neutral, usual trading. I'm a big fan of cutting my leverage if I'm neutral. I don't really, it's different. Believe me, it's different because if you're down a little bit, all right, if you're down a little bit, if your losing week is small, you trade as usual, that means you have a chance maybe to put up a big day. All right, that means you're going to overcome some losses and you're going to take a big day and you're going to say, man, that could be a big momentum builder for me. But if you're neutral, that means you've won some, you've lost some. Maybe you made a mistake earlier in the week. Maybe you didn't take profits where you should have. I say you reduce the leverage. I really do. Now, if you reduce leverage with a small losing week going, you're going to have a tougher time really getting on the lead lap. Meaning, okay, if I cut my leverage way down compared to what I've been trading and I have a small loss, now I got to win 2 or 3 trades to go home positive. I'm not into that. Trade as usual if you got a small loser. But if you're neutral, reduce your leverage. Maybe you cut your leverage, you make a trade and you win. You say, okay, that's good. We'll come back Monday. No donation Friday. We don't just give the markets money. They have plenty of money. They do not need yours. Keep your money for yourself. Be back Monday. There'll be more opportunities then. Well, not this Monday because it's a holiday. News of the day. The biggest thing I want to touch on here is the Michigan Consumer Sentiment Index. It's absolutely dreadful. 44.8 beneath 48.2 expected and 48.2 previous. This is what it's all about. The University of Michigan's Consumer Sentiment Index plunged to a record low of 44.8 in May 2026, revised down from 48.2 and marking the 3rd straight monthly decline. Let me read that again. Plunged to a record low of 44.8. That's the 10-year chart for the Michigan Consumer Sentiment Index. Pre-COVID, I've made this point a lot over the years. Pre-COVID, life's pretty good. COVID, we make the comeback in 2021, the world's reopening. Everybody thinks, all right, that's over, we're good. And then what happens? Then the inflation starts to kick in and the interest rates start to go up. And now they stay up. Then we started to get into that rate cut cycle in here. Then we come in, and then what happens? Interest rates stay where they're at. We're getting destroyed. Sentiment's as low as it's ever been, according to the Consumer Sentiment Index. The beginning of any recession is consumer sentiment. The United States economy is built on consumption. You get consumption and demand, you boost production. That commerce all fuels economic growth. As soon as the commerce dies down, people lose confidence in the economy, expectations dive, they don't spend money anymore. When they don't spend money, demand drops, production drops. There's no reason to meet the demand. Production goes down as well. Output shrinks, and you go into an economic contraction. Read something earlier today that the United States has a 40% chance of going into a recession this year. Is that possible? Very possible. Very, very possible. It's all about how long the Strait of Hormuz is closed and how long the Iran war goes. If it's over this weekend, you could see a recovery, probably a robust recovery by the end of June. If it goes through the end of June or maybe into July or August, it's going to be really ugly. Gas prices this summer here in the United States are going to be very, very high compared to where they've been. And that's going to be a major, major, major damper on economic growth. No question about it. All right, let's go ahead and see our ORB trade not doing very well, going against us. I sort of made the case of sort of a tough day to take an ORB, but that's how you would do it. I would cut this thing off right here just in case the wrong news item hits the board in the next 2 hours and we get the big reversal and then wipe out the low. Still in the trade, though. Still alive. Let's go to our Great Britain pound trade. We had a pound-dollar trade going. This one right here is starting to look a little bit better. This will be an interesting accumulation trade. We'll see exactly what happens in the coming days, and probably, I mean, that's not going to take a week, but this will probably take a couple days to pan out. So if you're going into Monday's trade thinking there's going to be a huge move, probably not. Probably not. Memorial Day holiday, U.S. liquidity providers will be out, so it's going to be a little bit slower. All right, everybody. That's going to be a wrap for me this week, and we'll be back here. Let me see. I've got the next 10 days from now. We'll have Welcome to June's Trade. That's going to be on, I believe, June 2nd. Will be our next live stream. I'm going to be out for a few days here, doing a little bit of traveling. Going to go see the world. Places I've never been. Should be good. See some friends over there in Amsterdam. So it should be all right. A little bit of business. I won't be live streaming. So if you have any questions at all, be sure to drop them over at How to Trade. But I won't be able to answer those until I return to the office as well. So I'm pretty much going to be on hiatus or gone for a while. Big picture, what to expect. Biggest thing I would say is the Iran war is going to be everything. And we just don't know. I'm tired of saying it. I've said it so many times, and it just seems like every live streamer or every news outlet or every radio show or anything I listen to, the hosts just keep droning on and on and on and on and on about Iran, and there's not much to say about it anymore. The bottom line is this. The United States doesn't look like they can open the Strait of Hormuz militarily, or they don't want to try it. If they would have already done it. Or if they could have, they would have already done it. We're starting to see that there's a lot going on there to deter the United States from going full military, boots on the ground and things to reopen the Strait. And really what this is all about now is the Strait of Hormuz. It really is. Now, they can say nuclear weapons and uranium and enriched uranium and all that stuff, and all that's great. That's great political talking points, and we could talk nuclear bombs all day if you want, but from a big picture, the entirety of Iran's leverage are the missiles and the drones and the Strait of Hormuz being closed. That's how they can hold the rest of the world really accountable economically. So until the Strait's open, we're going to see this kind of trading. We're just going to be chopping sideways. Equities will be up, down, up, down, up, down, up, down. Energy's up, down, up, down, up, down, up, down. And that's pretty much going to be the name of the game. As far as, what can we expect in June after I get back? Well, we're going to be looking at Kevin Warsh. We're going to be doing FOMC Live. We're going to have Warsh's first presser. He was sworn in today by Trump. So that's going to be fascinating to see if we can get any rate cuts at all. I don't see how with fuel prices as high as they are and inflation as bad as it is. This chart says a lot. I mean, this says a lot right here. And I get my way back machine. I think, man, what was life like back then? And I remember what things cost, a lot less than what they do now. And I remember this area right in here with COVID, as do we all. And then really right in here, I said the inflation's going to be incredible out of what comes out of this. Rallied, boom, boom. And now look at where sentiment is. That's not good. And I know it's just a survey, but that's not good. Typically, when you have sentiment that low, you're going to see a change in political leadership. You're going to see changes. The people aren't not happy. They're not happy with a lot of things economically, but more along the lines of sort of a deep negativity on everything. And that's exactly what those numbers show us. So big picture, what does that mean for our trading? it means we got to start keeping an eye on the U.S. dollar. If we go into a recession, typically the dollar is going to be high. It's going to be strong. And the reason why is because they wouldn't have cut interest rates. And I don't know that that's going to happen this year. I could see Warsh just sort of standing pat until the end of the year. That's sort of my prediction. I'll go on the record. I think he's going to cut, but it's not going to be until December, somewhere in there. So that's sort of what I'm looking at. As far as the rest of our markets go, if you do see an escalation in the Iran war, we're going right to $110 crude oil. If it's a big escalation, boots on the ground, attacks on Karg Island, terrorist attacks in Western countries from Iran, proxies, then oil goes to 125 or 150. If that's the case, then we'll see a pullback in U.S. equities, at least for a while. Global equities will suffer. Things like the Nikkei will take it on the chin. But if that doesn't happen and we just sort of keep doing what we're doing, it looks like stocks are going to keep grinding higher. Probably inflation-based. That's what I would say. As far as crypto or any predictions there, I mean, it feels to me like Bitcoin is really in a consolidation phase. What will it take for Bitcoin to reach 100,000 again? Probably going to have to see some rate cuts, probably stability globally. The Trump administration's already pledged a lot of support for cryptocurrencies and deregulation. That suggests that the long-term bullish case for crypto in general is there. But crypto prices right now, I know they're high, but they're weak. A lot of the altcoins are really weak. So 6 of one, half a dozen of the other. And then the last thing I'm going to address is AI. By the time we do another live stream, there's probably going to be 20 more AI bots out there. Maybe we'll just put an AI Shane up here. It might be easier for everybody. But AI is exploding at a rate nobody's ever seen. Nobody's ever seen it. How fast it's moving is blowing me away. So I would watch for more developments there in the near future. And that essentially, the AI bubble, it's not even really a bubble, but the AI boom is driving pretty much the equities markets north, especially the NASDAQ. I look for those trends to continue, at least in the short term. All right, everybody, I've droned on long enough, that's for sure. You guys have a fantastic weekend, and the week ahead should be good. We'll be back on June 2nd, Tuesday, June 2nd, with another live stream and some strategy. As far as your trading, stick to your guns. Good risk management at all times. Don't get carried away. Good risk management. We want everybody to be around to trade. We're going into the summer months. We're going to talk a lot about that as we roll into June, July, and August. I think that the summer times traditionally are slow. They're not going to be as slow this year because the news cycle's supercharged. And we'll be there every step of the way. That's for sure. All right, Bobby Bob, thank you. I appreciate it. Safe travels. Thank you, Jason. I sure appreciate it. Safe travels. Traveling's not too bad. It's tiring, but it's not too bad. It doesn't bother me too much. I don't mind it. Let's see. Fortunate Wilson, you're absolutely welcome, Fortunate. Thank you for joining me. And everybody over there in the How to Trade community, Ralph H., thanks for being here. Ralph, Dave's Apple, thanks for being here, Dave. Tuku, always a pleasure, Tuku. Thanks. I'm glad to see you back in the room and trading again. That's always important. Get right back after it, that's for sure. Tammy, good to see you, Tammy, and thank you. All right, guys, we'll see you back here. Tina Jing, thank you. We will see you back here on the 2nd of June. Remember, market closure Monday. Forex and crypto will be open, but there's going to be less liquidity, so take care of your money. That's for sure. Enjoy Amsterdam. Yeah, I think it's going to be a lot of fun. I'm looking forward to it. Took a look at some of the hotels we're going to be at today, or that I booked, and they look pretty good. I'm looking forward to the food. Everybody says you got to eat. And I said, I've never really had any trouble eating. I'm slimming down a little bit, but I've never really had any trouble eating. All right, guys, have a lot of fun next week. Take it easy. Watch yourself. And as always, trade the action well, and we'll talk soon. See ya.
A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling, brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch